This is not fast-cut entertainment. This is a slow, factual documentary. If you're here for the real story, stay till end.
$2 billion evaporated from India's second-largest public sector bank. There were no masked gunmen, no breached vaults, and no external hackers. The prime suspect was Nirav Modi, a billionaire jeweler whose diamonds were worn by Hollywood actors and global elites. On the other side of the ledger was Punjab National Bank, a pillar of the Indian financial system, with a 120-year history of safeguarding public wealth. Behind the glamorous storefronts and the sparkling inventory, a massive liability of off-book debt had been quietly accumulating for 7 years. When a bank places absolute trust in a high-prestige client, routine scrutiny often disappears. That blind trust created the exact conditions required for a multi-billion-dollar financial crime. The operation ran smoothly until May 2017. That month, Gokulnath Shetty, a key deputy manager at PNB's Brady House branch, reached his retirement date. On January 16, 2018, representatives from Modi's companies arrived to request routine international credit. They sat down with Shetty's replacement. Following the official rulebook, the new manager demanded a 100% cash collateral before processing the massive credit request. The representatives pushed back immediately against this demand. They told the manager they had received this exact credit facility for years, entirely without collateral. Searching for proof of this arrangement, the new official logged into the bank's core banking system. He searched the history of Modi's accounts and found absolutely zero record of these enormous loans. The paper trail was completely empty, yet foreign banks were actively demanding repayment. PNB suddenly realized it was legally liable for billions of dollars in debt that, according to its own internal ledger, did not exist. A letter of undertaking is a guarantee used in international trade. The issuing bank, PNB, assures an overseas bank that it will back a client's short-term credit facility. Nirav Modi used this structure to import diamonds, requiring foreign currency loans. The Reserve Bank of India mandates strict rules, a 100% cash margin, and repayment within a strict 90-day window. An LOU transfers the financial risk entirely to the issuing bank. If the client defaults on the foreign loan, the issuing bank is legally bound to pay the overseas bank the full amount. The entire system relies on internal oversight. Remove the requirement for collateral, and a safe trade guarantee becomes a blank check backed by public funds. The fraud relied heavily on the fact that PNB operated two disconnected software systems. There was the SWIFT messaging network used for global interbank communication, and the core banking system, or CBS, which served as the internal accounting ledger. Gokulnath Shetty and other rogue insiders used their supervisory passwords to access the SWIFT terminal. From there, they sent unauthorized messages to foreign branches of Indian banks, guaranteeing massive loans for Modi's firms. As shown here, the crucial step was concealment. The insiders transmitted SWIFT messages to foreign banks, but deliberately omitted any record in the CBS database. Operating purely on trust, overseas banks dispersed millions into Nostro accounts, routed into offshore shell companies. The perpetrators never breached a firewall or wrote malicious code. They found an internal technological blind spot where the messaging system didn't talk to the accounting system and exploited it for 7 years. But the scheme had a built-in ticking clock. The overseas loans matured in 90 days, and a missed payment would instantly trigger default alerts across the global banking network. This chart tracking debt illustrates their solution. To prevent default, they continuously issued exponentially larger LOUs to pay off maturing principal and interest. To buy more time, they began issuing LOUs with 365-day terms, blatantly ignoring the 90-day limit. To justify raising so much credit, Modi created a facade of booming business volume. He shipped the same diamond batches in circles between dummy companies, a process known as round-tripping, to artificially inflate his import numbers. By systematically rolling over the debt and falsifying trade volume, they transformed a short-term trade finance tool into a massive, self-sustaining Ponzi scheme. In early January 2018, just weeks before the new bank manager would demand collateral and expose the missing records, Nirav Modi and his uncle Mehul Choksi quietly boarded flights out of India. Left holding the bag, PNB submitted a formal disclosure to the stock exchanges on February 14th, confirming the detection of fraudulent transactions totaling billions of dollars. The public revelation triggered a massive sell-off. PNB stock lost more than a fifth of its value in days, and the panic wiped out 36,000 crore rupees across the entire nationalized banking sector. Because the SWIFT messages were legally binding between institutions, PNB was forced to honor the fraudulent guarantees. The government had to inject massive amounts of capital into the bank to absorb the devastating quarterly losses. A single failure of internal oversight at the Brady House branch metastasized into a contagion that threatened the stability of India's entire public banking framework. The fallout sparked a global manhunt. After a year on the run, British authorities arrested Nirav Modi in central London in March 2019, and Indian courts officially designated him a fugitive economic offender. The legal pursuit remains complex. Modi has spent years fighting extradition, launching repeated appeals through the UK court system to delay facing trial in Mumbai. Meanwhile, India's Enforcement Directorate worked to trace the laundered funds, eventually seizing and transferring over $1.26 billion in assets back to the defrauded banks. The crisis forced a permanent regulatory correction. The Reserve Bank of India issued an immediate mandate, requiring all banks to strictly integrate their SWIFT messaging networks with their core banking systems, permanently closing the blind spot. The fallout from the PNB fraud demonstrated that no amount of prestige, corporate glamour, or public relations can ever serve as a valid substitute for skeptical, mathematically rigorous auditing.